Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago, and what has been a wild little week here, just weather-wise, because we always have to talk weather, and not because we're old, because it's relevant to markets, and sometimes it's interesting, especially when we hear from folks that are pretty far down south, like we will in this episode. And joining me today, as always, from Kansas, Director of Feed Foundation's Mr. Jake Kingsley, and returning to the Grain Feed from way down in Atlanta, Illinois, Director of Buyer Relations, Mr. Verl, no doubt Prather. Team, how are we today?
Doing pretty good this afternoon, Jim. Might get a little sun this evening.
Awfully sunny out there, nice and warm.
Yeah, it was a really nice start to the week, at least up here in Chicago, right? We had like 60s and sunny, and then it drops down to the stinking 30s again on Tuesday. We're recording now on Wednesday afternoon, but another spring tease type of weekend coming this weekend. Little St. Patty's celebrations with some sunshine, some 60s, very good weather for drinking green beer, if you're into that sort of thing, Jake.
I'm into it. Got some plans for Saturday.
You seem like a green martini type of guy.
Yep. Couple extra olives. Never hurt.
Verl, what will your green beverage be this weekend?
I prefer Busch Light. To keep it simple.
Just green Busch Light.
Couple of drops of food coloring in there.
There you go. That's how you celebrate down in Atlanta, Illinois. You just get a Busch Light can and you just drip some little food coloring drops in it. You can't even see the green. You just know it is. You drink it. As long as you know it's green. As long as you know. Well, what hasn't been green are the grain markets here over the last day or so. I don't know if Verl appreciates that transition or not, but it's been a really interesting stretch here over the last week, especially as we record on Wednesday a WASDE report yesterday. So to get to that page, if you would kindly timestamp the broadcast, it's about 3:15 Chicago time on Wednesday afternoon. We are a full trading session now removed from that March WASDE report. And of course, we have our Director of Buyer Relations here, Mr. No Doubt Prather, on with us. Verl, let's just take a quick look. I know you don't want to, but we got to take a quick look at what happened with the markets today, because it was a red day and things didn't close as bad as it looked there for a bit, but we did have May corn down 9.5 cents the day after WASDE, managing to hold 460, but by just less than a cent there. And then December corn was down 6.25, and it did hold below $4.50 per bushel, down at 448.25. May beans, Verl, just holding $10, but it was down about 10.75 cents, while Nove was down 9 at $10.06.5. May meal, that not as stubborn, a little byproduct, but stubborn enough at $300 per ton as of late, was down 160, holding $300.20 per ton. So it's been a down day in the markets after what had been a recovering week last week and a recovering session on Monday. But then WASDE, Verl, yesterday on Tuesday really seemed to deflate some of that week-long recovery that we had seen. And again, you go back to where we were a few weeks back versus to where we were then last week. We had a near 70-cent liquidation coming from old crop corn futures. It was a really big move. We saw managed money take a lot of their net long position off, still very much net long now, but clearly entering a de-risk mode to an extent. Then you saw light bounce through last week. WASDE just kind of, put a pin in that one for a bit, at least for now. But as we know, every day brings new surprises from certainly the trade policy perspective. I know that's a tough subject to avoid, but it's unfortunately super relevant day to day. So, Verl, what are you seeing in the grain markets as we come out of that Tuesday WASD report?
Directly after the report release, this market was kind of confused on what to do with it, right? And we didn't have a whole lot of motivation that came from the numbers on the report to go either direction in all reality, right? I mean, the USDA just kind of decided, hey, there's no need to change the balance sheet for US soybeans or US corn. And there's no doubt that corn bulls were really looking for a higher demand estimate for both exports and ethanol usage. Currently, exports are ahead of the 5 year average pace, at least by about 200 million bushels. And ethanol, you could calculate out as being ahead of pace by about 160 million. While we certainly have heard of some processing facilities dialing back on corn intake, we really haven't seen any real material slowdown in production of ethanol overall. And on the export side, a lot of traders have been kind of eager to talk about this idea that corn demand has been strong just due to front loading with all the current tariff talk that you mentioned. But when you kind of dig in a little bit deeper and look specifically at the countries that kind of are we're at most risk, I would say, to receive some retaliatory tariffs on our grain products. Mexico's only about 4% ahead of last year. China's actually 98% behind last year corn purchases from the US. Neither of these numbers really scream to me that either country has been stocking up on US corn more than normal. And the corn market, obviously, today, traded deep into the red, and it seemed pretty nervous about the retaliatory tariffs that the EU announced against US farm products as well as other products just today. Overall, I think it's going to be important to remember that, looking at some of the numbers, EU represented just about 2.7% the US corn export value in 2024. So therefore, they're really not a massive player when it comes to importing US corn. However, I will say there are broader macroeconomic concerns that are related to starting a bunch of trade wars with, global countries. And the more countries that jump in line and retaliate against us, I would say that traders just get a little bit more nervous and they're more likely to jump into the risk off mode, right? And maybe that's more of what we're seeing today. Otherwise, corn exports really seem to have a pretty solid base of global customers right now that I kind of point the reason to of the gain in pace that we've seen so far. And we're obviously very reliant on Mexico. But like I said, they haven't been the reason for the gain in pace that we've seen so far this marketing year. On the producer front, new farmer selling is pretty much slammed to a halt, right? Many farmers or grain farmers were very active sellers up until like the middle of February, but they've really failed to find much motivation at all, with the futures falling as hard as it has for both commodities on continuing to push a narrative on new sales. As a result, we've actually started to see basis have to strengthen up a little bit in the Midwest, but I will say, it does still feel like commercial ownership is still pretty heavy. And that kind of threatens to unravel the short-term basis trend of stronger. Once they smell opportunity, they're likely to unload what they have.
Yeah, Verl, this is going to be a super interesting stretch because you just named a lot of the headwinds we're potentially facing now. We thought it was just more of a North American struggle, if you will, but potentially with Mexico and Canada. The Mexico side actually seems okay, or at least is on the back burner at the moment. The Canadian escalation really kicked into gear yesterday on Tuesday and into today on Wednesday. A lot of talk of, maybe you do restrict ethanol exports from the US into Canada. You brought up the EU, then is also kind of fresh news as we record. The Chinese situation appears to just be a pretty steady escalation that we're just not even talking about as much at the moment, but still very much a real issue, especially on the soybean side. But you also said, like you mentioned, that risk off mentality. And we talk about risk off for corn, right? Managed money had been and still is, but had been very net long the corn market, very net long. And if you look back to where we were in like July and August of 2024, they had a near record and or potentially all-time record net short. And we talked about what de-risking looks like. And back then, de-risking meant they had to cover shorts and start to buy this thing. Currently, de-risking for them meant they need to take profits and start to sell this market. So we've seen this big pullback. And now, Verl, like you said, there's potentially even a long-term worry over what all these trade policies and impacts have. And maybe it's just the broader macroeconomic impact looking weak for not just the US, but the globe, and saying maybe just less commodities are purchased in general from a global perspective. So we're seeing prices come down. There's a lot to work with here. I want to hear from Jake too on the cash standpoint from the grain buyers for feeding. But Verl, in terms of, we looked at that balance sheet after that WASDE report. Were you surprised that the USDA did nothing with the US balance sheets? Like just nothing with corn and beans.
Yeah, I was disappointed for sure, right? I thought that we'd see better exports and better ethanol demand for corn. Surprised is probably a strong word. It's hard to make a living betting on the USDA, what they're going to do or what they're not going to do. So I try not to do that.
I think that's a very smart move. But yeah, I think as Verl, you've been arguing, you can absolutely make the case that they should and could raise the export number, but there's just something perhaps about this trade issue that they were just reluctant enough to not touch that figure just yet. And they also didn't touch South American production either. So that's going to be interesting to watch going forward. And then we'll the projected plannings report at the end of March. So, Jake, as we move into that projected plannings report at the end of March and digest the most recent WASDE report, what are you seeing in the cash markets over the last week or so that might impact our feed buyers out there?
Yeah, I think Verl had mentioned that corn basis has had to perk up a little bit to keep some physical grain flowing, with futures having declined as much as they did over the last week of February and first few days of March. We've seen that. Even so, corn basis values in most markets are still very palatable for those needing to buy something to get them through the next few months or even through September. I think certainly it's worth stepping in and getting something done for the next 60 or 90 days on those numbers, just to take some of the uncertainty and volatility out of your feed purchasing. But we are expecting, as we've talked about before, an addition of 2.5 to 5 million acres of corn versus last year, just based on the corn to soybean futures price ratio right now. It looks like prep work that would have started last fall and is maybe getting underway now is indicating some significant increase in corn acres. And so that certainly would warrant a better basis opportunity in the new crop window, but also depending on how these tariffs shape up and how the last quarter of the marketing year goes for this old crop period, could see basis soften maybe in the July to September window as well. Just really dependent on weather and what the acres that are in the ground look like at that point, I think. But anticipating some corn added in a few fringe regions that maybe will lose some cotton acres or something else to corn, as well as transitioning some beans to corn in the Midwest, which will be helpful on that front. And with corn potentially taking away soybean acres, we're seeing very good opportunity in the protein market, particularly in soybean meal basis, both old crop and new, that we're having folks step in and get some cash feed bought there on a healthy portion of, well, everything that they need really through September, and a healthy portion of what they need for the new crop window, October through next September. We've seen soybean meal basis values at or $5 or even $10 a ton better than what our best values were this past feed year. That's a great place to step in, and you can capture some pretty nice futures values along with that to get the first chunk of what you need bought. I think a lot of what we've been talking about has been maybe get a quarter or a third of your physical feed bought with a vendor, and then another quarter or a third hedged using some sort of call strategy to manage the futures. And now all of a sudden you've got half to 2/3 of your topside risk covered, and you've got 2/3 to 3/4 of your downside risk if futures roll down to 300 or revisit 280 or even better. 2/3 to 3/4 of your feed needs are wide open, dollar for dollar on the downside in that environment. And again, it's just taking volatility and uncertainty out of this market early while values are palatable relative to the last handful of years. And it's hard to know how this thing's going to shape up with tariffs being as chaotic as they are. We saw some headlines today, potentially of China now getting involved in some tariffs with Canada, which maybe completely negates the concerns that we have for our tariffs on that Canadian canola. Who knows how this all shapes up, but you can take volatility out of that. And then we also have to be mindful, as Verl had mentioned, that crush margins, they're not overwhelmingly positive for these new crush facilities coming up across the US. So any kind of decline in bean acres that increases cost there could negatively impact production. You've also now got this Doge going into different parts of the ag sector. And I would expect that the renewable fuel initiatives are well within their crosshairs. So if we see this renewable diesel program take a hit, that has been the primary driver of growth in the soy crush industry. If they start to hack away at that, all of a sudden those incentives go away, and you certainly expect to see soy crush roll back on something like that. And all of those things become bullish for soybean meal, both on futures and basis. So a lot of activity to be aware of. And then, of course, we've got weather to contend with in both South America and North America. So there's some opportunity. There's a lot moving around right now, but we've had folks really taking advantage. You got to be quick. I think you got to be proactive and have strategies in place, orders working, and plans ready to be acted on in very short notice in a market like this. It can't be something that you say, oh, here it's happening. Let's talk about it. What do we do now? By the time you come to your decision, your opportunity may be gone. So got to be proactive and ready to move when the time is right.
I think that's very well said, Jake. Exactly what we're doing here at EverAg, right? We've got the director of buyer relations on this show. We've got the Feed Foundation's director here as well. So if you do have questions about this and would like assistance on maybe having orders working potentially with your mill, either on the buying perspective for feeding those animals or on the sales side from a row crop producer perspective, please reach out, because that is what we are here for, especially during these volatile times. So that being said, a huge thanks to Verl for joining the show today. Verl, great to have you. Enjoy that green bush light.
No, I will.
I bet you will. I bet you will. I would also like to thank the EverAg Insights crew for their support. Thank you to Paige for production magic. And thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.
Why doesn't Jim ever thank me? Put it on their page.